welcome to today's lecture. My name is Uzma. I'm currently a student at UNSW studying a Bachelor of Commerce, majoring in Accounting and Taxation, and I will be taking the ATAR Notes Economics lecture for today. I hope that everybody is doing well and you're ready to learn a little bit of economics. So let's get right into it. But before I start, actually, I've got a sort of slide to summarize some of the free resources that ATAR Notes has available just for your own information and knowledge. So if you are interested, obviously the lectures is one of them, but we also have a heap of other resources such as study notes, discussions, videos, articles, etc. So if you are interested, please do go in and have a look at those. They will be, I'm sure, of much benefit to you all at this stage of the HSC. So yeah. And more resources. These are our paid resources, but they are so great. Would highly recommend. So study guides, we've got like printed revision materials with top tips to help you get great marks. It's really key and really important to, have knowledge of the content in the syllabus, and these study guides sort of summarize that for you so that you're ready to go. So I would highly recommend those. And then if you want an online version, you've got it all on Ed Unlimited. So it's basically like a Netflix of all of the study guides you could ever need, and it's all in one place and easy for you to access. So it's even like got them for English as well. So if you have like text-specific subjects, they will have a lot of the text study guides on there as well. So that's great. And finally, TuteSmart, which is online tutoring from elite recent Year 12 grads. So I do tutoring for business studies. So yeah, have a look into that if you are interested. And we also do private tutoring where I can tutor for economics, business, and a wide range of other subjects. And we've got many tutors on board who do a wide range of subjects. So if you are interested in any of these resources, please do visit this link down here, atarnuts.com/register for you to access that. Okay, let's get right into it. So, HSC Economics Lecture Series, looking at current economics news and HSC Economics, tracking out points in the syllabus. So we're looking at 3 and 4, and exam tips, tricks, and skills. So let's get right into it. So first of all, we're going to draw our focus onto the current economic news and HSC Economics. So let's get into it. So if you look at your syllabus, and even when you do exams, you'll see that one of the requirements for economics is to have a contemporary economic understanding. So they want you to read up on the news. They want you to know what's headlining in the news this week. They want you to know what's been going on in the economic world, not only in Australia but across the world, but yes, Australia. So do I need to read the news is often a question that comes up. In longer response questions, you must include examples that link back to your theory. So you want something to back up your theory. If you're talking about monetary policy, you're talking about when the rates rise or when the rates fall, have examples to back it up, because we know examples. When the cash rate falls, we saw examples of the cash rate sort of decreasing dramatically during COVID, and then the aftermath of COVID right now, the cash rate's been increasing every month for the past 2 months, right? So similar to using quotes in English, you need to have basically like quotes or news snippets to back up your theory. So 10 minutes a week, just literally spend researching different articles, looking at different articles, different news websites related to the economic news, what's going on in the economy, and just make like a little Word doc of all of the information, a summary of information that you've gained for that week. And then do that for every week, and I promise you that you will thank yourself when you get to the HSC, and close to trials HSC period, because you'll see that it is so important and so essential in achieving success. You're not going to be one of those people that the night before they're researching everything that's happened in the past year, because that would be absolutely terrifying. So some of the recommendations that I've put on there for, I guess, news sites that you can visit: Ross Giddens, Sydney Morning Herald is a great one, ABC News, Apple News app. Just go into the Apple if you have an Apple device, and I'm sure if you have Android you can also download a news app, and just click follow the economic news, the business news, and so you'll like just get updates automatically. SBS News is a good one. The Guardian is another good one. The RBA is a good one as well. So they do like summaries of the cash rate increasing, decreasing, everything related to that. So it's really interesting to have a read up on that and add that to your notes. And the RBA tends to not overcomplicate things most of the time with their explainers, things like that, which I'll go through later on as well. So, how current do my stats need to be? So, you don't need to know stats pre 1990s, that's fine. You should avoid giving current examples from pre 2018 unless you have no other choice. So, if there's no other option, that's the only stats available, which sometimes is the case, that's fine. But if you can find something more recent, it's better, right? So 2019, 2020 is generally accepted as current, but if you can find something more current, such as 21, 22, 23 even, then you're more than welcome to go ahead and use that. HSC papers are written around the middle of each year, so they won't expect all the stats to be super recent. They do understand, like, that's very difficult. And also, like, the papers are written at the middle of the year, so if something happens a day before, you probably won't be like very specifically questioned on that because the paper's already been written. Stats you must update include the cash rate because it changes every month. The first Tuesday of every month, the interest rate changes. Not the interest rate, the cash rate, sorry. Economic changes, as in it changes from the month prior, so they have three options. It stays the same, it increases or decreases, but essentially they're re-evaluating or updating the rate, or the stance, I guess. So cash rate, economic growth rate, which often changes depending on where you're looking at it. Can happen quarterly, monthly, just depend on the country and what stats we can find. And the AUD and the US dollar and the comparison of the exchange rate there, which is so important, right? Because it's essentially how well Australia is doing compared to the US, and we can see how our dollar is doing. This changes literally every second, so I guess just have like an overview of, okay, it's sitting between this many cents or whatever it is. How can I remember it all is often a question I get asked, and it's a very valid question. Tied in with theory is a great tip that I often give to students. The fact that it is associated with theory can make it a lot easier because you've learnt the theory component and now you have an actual real life example to go with it, so it can make it easier and put into perspective where you can actually see it, so it can help you out. Color differently to notes, so have it in a separate area, separate section from your theory. So have the theory, okay, here's the theory component and then here's a real life example. Have it separate. It's like an example that you would have in English as like a quote. Summary tables and graphs. So mining boom, GFC, and current, for example. So mining boom 03, what happened? Great economic growth. GFC, a huge fall in economic growth, not too bad because Australia survived a recession. And current, what happened during COVID, etc. So those are like the major events, can really help you sort of figure out what's involved with the news and stuff like that. So knowing the major events is very important because a lot of the time in economics you'll get graphs and you'll have to go back to that and you'll have to have a look at what's involved with the major events, etc. So knowing that is really useful. But yeah, that's an overview of what a contemporary economic understanding is. So what has COVID caused economically? So going into 2020, Australia had worsening economic performance without consideration of the risks of COVID-19. So we're not even focused on COVID yet, and we were already not in a great place. So that's something to have a think about. The worst performance we've had since the GFC. So there was weak spending, consumers were not so confident, which means investment was not very high, which means we didn't have as much money circulating in the economy. Economic growth forecasts repeatedly were cut by the Treasurer, so there was like a few issues around that, and like around how much we're growing as an economy. There was $320 billion, more than $320 billion to combat economic impact of the pandemic, the coronavirus pandemic. So then to the then Prime Minister Scott Morrison, he sort of said, and a quote that he gave when releasing the Compact of Economic Impact, he said that this is the biggest economic lifeline in Australia's history. And it kind of reminded me of the GFC. So, having a think about and making comparisons to that, I think, obviously COVID was a lot worse for Australia specifically. So, yeah, something to have a think about there. And I think, obviously, COVID had more impacts than just on the economy. With the whole health system, etc. So, stimulus represents about 16.4% of GDP, supporting 6 million workers and around half of the Australian workforce. So, COVID has caused a lot economically. It has completely changed a lot of the economics that we see even to this day. And they had huge, for example, drops in the cash rate, which they're now trying to get back up. It's had a huge impact on inflation, where previously you could buy some bread for $3 or $2.50 is now almost approaching $4.35 for a loaf of bread. So it's like, little things like that you may not necessarily focus too much on, but you see even the little things have been impacted by COVID. As well as a whole range of other factors that contribute to the economy, like the supply chain crisis, etc. So, as at 4 May of 2023, I screenshotted this from the RBA. There may be a more recent one, but when I was making the slides, this was the most recent one. If you would like to see if there's a more recent one, just type in RBA explainer snapshot, economic snapshot, and it will come up. And I would highly recommend doing it like before your exams and your trials, because there will be a more recent one with all the updated stats. But it's a really great sort of infographic of the recent stats that we see or have seen in the Australian economy. And you can actually get the previous ones and then compare them month on month to see what's happening. So the cash rate is currently, the target is 3.85%. The economic growth is about 2.7%. Inflation is at 7%, which is quite high. Wage growth at 3.3%. Unemployment rate at 3.5%. Employment growth has been increased by 3.3%. We can see the household saving ratio at 4.5%, right? When people are saving, it means they're not confident in the economy. So they're trying to save all their money rather than spend it. So $1 Australian is equal to 67 US cents. China's GDP growth rate is about 4.5%, and net foreign liabilities as a percentage of GDP is about 36%. So these are the types of stats that you would want to know, that you would want to memorize. Okay? So let's go on to economic issues. So this topic is about the nature, the causes, and the consequences of the economic issues and problems that can confront contemporary economies. Okay, so it's very important to take that into consideration. So this idea of what are some of the problems and issues that can arise that impacts the economy. This topic forms the basis of topic 4, focuses more on responses. So topic 3 and 4 are very commonly tested essay topics. Having a good understanding of both is crucial. So 40 out of 100 marks of your trials in HSC come from the essays. So it's really important to make sure you do well in the essays, right? So each mini topic has a dot point called trends. Knowing contemporary and historical economic data is crucial for this topic, as you will be asked to analyze the data. So you can't, a lot of students, when they get the graphs in one of the essay questions, you get graphs, they tend to just ignore and just not make any reference to that, which is completely not advised. You want to make reference to the graphs, right? It's really important that you do that. So you want to be able to analyze the data, and that is a skill set of its own that you want to develop before your trials in HSC. And if you would like to develop that, I would highly recommend going to the RBA, and they actually have resources for how to read graphs and analyze graphs and things like that you can do on your own as a worksheet as well. So, content block 1, let's look at economic growth. So, economic issues in Australia's economy. Here's just a sort of snapshot from what the syllabus is saying is important. So we've got aggregate demand and its components. We've got injections and withdrawals, so IGX-STM, the simple multiplier and how to calculate it, measurement of growth through changes in real GDP, sources and effects of growth in Australia, the increase in aggregate supply, and trends in business cycle. Okay, let's start off simple, nice and easy. What is economic growth? It simply refers to the increase in the country's productive capacity over time, which is measured through real GDP. Okay, so productive capacity over time has increased, and that is going to be referred to as economic growth. So we actually in 2020 broke a world record with going 28 consecutive years, so in a row, without a recession. And a lot of the countries actually couldn't get this because of the GFC, where a lot of countries fell into recession, but Australia were able to save themselves through stimulus packages that were introduced at the time to encourage people to go out and spend. The recession is 2 quarters or 6 months of negative economic growth. So that's a definition of a recession. Okay, so make sure you do understand that. So, aggregate demand and components. So, aggregate demand is the total demand, which is the level of expenditure over a period of time. So, how do we measure that? We've got CIG minus exports imports, which we'll go through as well. That's a net. Keynesian economic thought looks at this idea of output and therefore growth is determined by expenditure of consumers, of firms, the government, and exports, which makes up aggregate demand. Okay, so that is how we essentially look at how much we're growing. So low confidence, for example, in an economic crisis or a downturn, like let's think back to COVID, where there was a lot of there was a lack of confidence in the economy. There was a downturn, like people were saving the money, they weren't spending, so spending decreases. Just a second point. Demand contracts, so the demand will fall. There's not many people demanding products anymore. They're just trying to save as much of their money as they possibly can, and therefore governments need to intervene and stimulate demand. So they need to come in between and say, hey, look, we actually need demand to grow. So one thing that they did in COVID, for example, was they introduced stimulus packages. They gave out, like in NSW, for example, they gave out Dine and Discover vouchers of $25, I think it was. So you can go out and find a new place to eat, support a local business, or go and discover a place and spend your money there. Go to the aquarium, whatever it is, right? So that was not during COVID, but after COVID, when they were trying to get people back out and back into spending and etc. like that. So hopefully that's making sense. So yeah, like I mentioned earlier, this is what's involved over here. SIG minus the net of the export import. So we've got consumption, which is the C, spending by households. It can be autonomous, independent of income, induced, dependent on income, whatever. Investment, which is spending by business firms to increase productive capacity, influenced by cost of capital, interest rates, profits, business expectations, tax rates, government policy. It's a huge, there's like so many things that impact how much investment comes into the country. Government, so expenditure by either the local, state, or federal government is known as the government area of aggregate demand. So that's the example of, for example, the Dine and Discover vouchers, which was introduced by the state government, I believe. Net foreign demand, so exports, looking at expenditure by foreigners on domestically produced goods and services, which is exports, minus expenditure on foreign goods and services, which is imports, right? So if we have more exports than imports, it means we are actually making more money as an economy than we are sort of giving away or like buying things. So that is where we can sort of determine that. Next, we have aggregate supply. So this is the total productive capacity, which is income when all factors of production are fully utilized over a period of time, which is known through CST, which we'll also go through. So equilibrium is when the aggregate demand is equal to the aggregate supply. Okay, so the quantity of real GDP demanded equals the quantity supplied. Okay, so that's why we have this infamous sort of formula that we use in economics, which is your injections equals your leakages. Okay, so let's think back to this, maybe revision for some of you. This question. So we've got the table shows hypothetical data for an economy where you've got IGX and STM. Which statement about this economy is correct? So you want to determine, okay, which ones are which ones are injections and which ones are leakages, and then determine from there. So at this point, if I were you, I would just pause the video, have a go at this question, have a option. This should be, sorry, this is incorrect. It should just be A, B, C, D. Choose one of the options, and then we'll go through the answer. So pause. Okay. So hopefully you've had a chance to attempt the question. We will now get into the answer. So, let's go through the options here. So, we've got the hypothetical economy. First thing I did whenever I had a question like this, I would separate the leakages and the injections. Okay, so leakage, 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 and then another color. Let's take blue, injection. Okay, so we've got STM equals IGX, which we already know. Let me change the color. Actually, might be a bit confusing. Okay. Right, so we've got STM equals IGX. 35 plus 30 plus 60 equals 125 in leakages, which we identified here. 35, 30, 60. And then injections, we've got 25, 20, and 70, which makes up 115 of injections. So what's the rule? If you're apologies. So if leakages outweigh injections, that means we've got a contracting economy because we've got more money that's leaking out of the economy. It's like a leaking tap of money. Then we've got more money injected into the economy. Injections, however, if injections are more than leakages, that means obviously the opposite. It means that we have more money coming into the economy, so that's an expanding economy. And so if that was the case, which it is here, because we've got which is not here, sorry. So it is contracting because we've got 125 of leakages, which outweighs the 115 in injections. Right, so that's why it's got, again, more leakages than it has injections, so it's a contracting economy. So it is contracting because leakages are greater than injections, and that would be the answer. So hopefully that's making sense. So that's from the 2017 HSC paper. So you can see that these types of questions, these are the types of questions that you will be asked in the paper. Righto, so hopefully that's all making sense so far. We're going to move on to the next point, which is the multiplier. You may have already gone through this, so this might be revision for some of you, or this may be a new concept for some of you. So, greater than the proportional increase in national income due to the increase in aggregate demand. So basically, we've got a respending respending increases income, production, employment, and economic confidence. So this idea that we've got the increase in AD and that impacts everything else. It's sort of like a flow-on effect. So how do we calculate this? Well, K just means the multiplier. So the multiplier equals 1 divided by 1 minus the marginal propensity to consume. Or if you don't have the marginal propensity to consume, you can use the marginal propensity to save, and that's going to be 1 divided by MPS. But even if you didn't have it, you could still figure out what the MPC is just with 1, which I'll show you in a second. So if you want to figure out the new income, which is often what you're asked in HSC questions, you then want to get your multiplier, which you've calculated by either one of these, and you want to times it by the increase in income to get your new income. Okay? So MPC is your marginal propensity to consume, or the proportion of your extra money, so every extra dollar consumed. Okay? So amount of consumption divided by change in income is how you get your MPC. MPS is the marginal propensity to save, so the actual proportion of the extra dollar that is saved. Okay, So amount of savings divided by the change in income. So one is related to spending, one is related to saving. So measurement of growth through changes in real GDP. So Australia's GDP sits at around 1.8 trillion, which is, I guess, like sort of an approximate of the GDP. The real GDP is the increase in value of goods and services compared to the previous year adjusted for inflation. So because of inflation, we want to try and remove the effects of that because it can really distort the figures. So we remove that and we get the real GDP compared to just the GDP, which is why it's called real GDP. So the real GDP per capita means per head, so per person. So how do we do that? We just get the real GDP and we divide it by how much ever a population is. So per capita recession is when the population increases faster than real output. Okay. So sources of economic growth in Australia. So anything that encourages growth in aggregate demand. So again, going back to our aggregate demand formula, which we discussed earlier, will be a source of growth. Okay, so Australia has avoided a recession for 27 plus years. Remember back to the world record we broke in 2020? Natural endowment in minerals and energy. So we do have a lot of minerals and energy that we're able to either dig up from the ground as minerals, or we just have a lot of those resources available which we can sell off and make a lot of money out of. Comparative advantage in mining and farming. So we have that comparative advantage. We're able to do it better than most economies in the world, and so most economies will just buy it from us. And highly skilled workforce. So we have a lot of people that are very highly skilled. They go into tertiary education, or they have some sort of education or unique skill set that they can utilize in a job, as well as we have sort of quite good technology as well. So we have a whole range of different factors that help our economy do well, and these are some of the factors that have helped us avoid a recession as a country. So factors of production as sources of growth. Sorry. So natural resources such as land, labor, capital, and enterprise, which is also known as entrepreneurial ability. So increase in the quality of land, quantity or land, or new resources discovered will fall in cost because we have now an increase in supply. However, this needs to be developed within the parameters of the environment. So a lot of criticism that Australia gets is surrounding this idea that, yes, we have a lot of resources in the land, but we are digging up things and we're causing a lot of issues, and we're making like fossil fuels, things like that increase, which is not great. So a lot of people are actually calling on Australia to have more renewable sources of like energy, things like that we can offer. Labour, so the size of the labour force participation rate increases, or increase in the quantity or quality of the labour force are both things that, so it's either quantity or quality of the labour force increasing. So lower costs increase productivity and skills, right? So those are things that we can get out of the labour component. Capital, so increase in capital stock, quality and technology, or capital deepening. So when tech usage grows faster than the labour force, that's something to keep in mind as well. So improvement of production methods can increase, obviously, productivity. So enterprise is also known as entrepreneurial ability. So this refers to people with ideas who are willing to take calculated risks and spend money to start and develop a business. This is an investment because if the business does well, it's going to produce money for the Australian economy. Government policies as a source of economic growth for Australia. So effective government policies and political stability can create a favourable climate for economic growth, because investors will feel confident in the economy. They were like, you know what, Australia's doing well, they have great policies, they're really stable politically, so I feel safe investing my money into Australia, and I feel like I will get a return. So the Australian government can use fiscal or monetary policy to influence economic growth. The government's overall role in the economy is to provide a favourable environment for economic growth. right? That is their role. They want to see the economy grow. So, what are some of the effects of economic growth in Australia? So, we have both positive effects and we have negative effects that we should consider. So, increased living standards due to higher disposable incomes is something that is a positive effect. So, of course, when living standards are improved because people have more money to spend on things, that's a good thing. Increased employment opportunities, which may increase wage growth and support a decrease in unemployment. So, that's another one that is quite important. So, you want to make sure that you do take that into consideration. And then finally, labor mobility. So labor moving across. Structural unemployment, so displaced by tech, which requires new skills. So this may cause an increased spending burden on the government, which is something that needs to be considered as well. Inflation, so increased aggregate demand pulls up prices and possibly leads to bubble growth. The balance of payment issues. If you've been through the balance of payments topic, that is something to consider. So more imports may cause trade deficit, which is not something that is necessarily good for the economy. Thinking back to aggregate demand and net exports. Externalities, sorry. So social costs like environmental degradation. So if you've been through the environmental sustainability topic, this may be something you already are aware of. But this idea that we need to consider more than just the environment, more than just the economy and economic growth, because we also have the environment which is impacted, like we talked about with land, right? So if we're just focused on economic growth, we're actually producing things at a mass rate, it's causing pollution, all of these things, that's going to have negative impacts on the environment, which is not something that is good for the economy and the overall country, I guess. So, increased aggregate supply, so improvements in efficiency and technology. So, aggregate supply can increase through increased productivity, which is dependent on the sources of economic growth as contributors to increase overall capacity and efficiency. Right, so capacity constraint is this idea that the economy is constrained as it approaches full employment due to the principle of resource scarcity. Right, so we don't have, and if you think back to the first thing you learned in year 11, it's the economic problem. We have unlimited resources, we have unlimited wants, but we have limited resources. So there's a scarce amount of resources, but we have, an unlimited amount of wants. So we need to choose which wants to satisfy with our limited resources. So approaching full employment in the short term means that labor is scarce. Okay? So, therefore, the capacity to grow decreases and the price of labor rises as firms compete for skilled employees and are forced to raise wages which seem more attractive to employees. Right? So, an analogy, why were or are Yeezy sneakers so expensive? It's because sneakerheads compete for a limited amount of shoes, driving prices up. So, there's only a few pairs of shoes in the market. The same logic follows if labour becomes scarce and firms need to compete for that labour. Okay? So Australia's last recession was actually in the early 1990s, and ever since then there has been an average of 3.5% of GDP growth in the last 20 years due to the global resource boom and also the terms of trade. So, before the COVID recession, I guess, is the one that we had in the early 1990s. Successful in maintaining a sustainable rate of economic growth that does not push inflation above its target range of 2 to 3% is what we aim for. This is something you may already be aware of, but yes, this is true. Inflation targeting is one of the key factors in Australia's economy. So it's something to take into consideration when we are learning about the economy. Australia experienced below average growth of 1.3% in 08 and 09 due to the GFC. Okay, so due to the GFC, we actually had below average growth. The Australian Treasury stated that Australia avoided a recession after the GFC as the government responded with a large fiscal stimulus, which increased spending. Okay, so that's again something that we've talked about earlier. This idea sort of followed suit again during COVID, the pandemic, when they were trying to recover from the pandemic and they were encouraging people to go out and spend. Australia has higher than average economic growth compared to OECD countries. So there's 3.7% per annum, according to Austrade 2023. So yeah, we are doing quite well with, compared to other economies of our caliber. So that's pretty good to hear. But there are still many things that Australia can improve. Okay, moving on to the second content block, which is looking at inflation. So inflation, we're looking at the percent. What is inflation? It is the percentage change in the general level of prices, the prices of goods and services, measured by the CPI, also known as the Consumer Price Index. So it must be maintained to achieve price stability. Okay? So it's really important that we do understand that concept and we do go through it. So inflation may be a term that you've been hearing a lot recently. So hopefully this will sort of reaffirm your understanding of what it is. So the CPI, what is that? CPI is looking at Consumer Price Index. It is the average level of prices of the goods and services that are typical household buys. So it's a basket of goods and services that typically most households will buy. For example, petrol. It is measured through changes in the price of selected household items, weighted according to significance, monitored by the ABS. So CPI figure for inflation is released every 3 months. The CPI index, so Consumer Price Index, rose 1.4% in the March quarter and 7% annually, according to the latest data from the ABS. So sometimes petrol won't be included in the CPI, sometimes it will, just depends on what CPI basket you're looking at. But household items as well, like groceries, things like that, are all included. Inflation rate is the current CPI minus the previous CPI divided by previous CPI, and then you want to times by 100 to get the percentage rate. So this is a formula that you need to know for your exam. So I would highly recommend that you do memorize that one. Righto, next up we have headline inflation. So actual inflation rate, but it may include one-off events that distort the figures. For example, GST being introduced. Okay? So underlying inflation, what is that? That is a more accurate measure of inflation because it removes the effects of one-off events that distort the entire figure, can change the whole figure even though it's just one small thing that probably won't happen every time, like the introduction of GST. So underlying inflation tends to be more accurate in that way. So if you're ever asked which one is more accurate or why is underlying more accurate, then you have your response. RBA has a target framework for the inflation rate of between 2 to 3% since 1993. So as a nation, we are required to hit out the target on average over the economic cycle. So here's an example of a CPI calculation. So base period 2017 and our current period, which is 2018. So previous, current, right? Think back to the formula. So we've got 5 kilo of oranges at 80 cents, and then expenditure $4, and then let's say 120 and expenditure $6. 6 haircuts at $11, and then goes up by $1.50, and 100 bus rides at $1.40, and then we've got them at $1.50. Okay, so it goes up by 10 cents. So total expenditure for it adds up to 210, and over here adds up to 231. What is the CPI? Well, we get the current year minus the previous year divided by the previous year of 210, and then we times it by 100 to get the percentage of 10%. Okay? So hopefully that is making sense, but yeah, that is literally like how you would do a calculation like that. You probably won't be given this much information. Like, I guess you won't be like told all of these specific things. You'll just be told the total expenditure for previous, current, but this is like an example to help you understand as well. Okay, moving on. Causes of inflation. So demand pull inflation is the first type. This is where there's excess demand compared to supply, which causes shortages and prices to rise in the short term. Okay, so we've got a lot of demand compared to supply, which causes a lot of like shortages, things like that, and price increases. Okay, so think back to like toilet paper during COVID. A lot of people were demanding toilet paper, so the price of toilet paper actually ended up going up. Demand curve shifts to the right, so there's an increase in the demand. What is the cause of this? Any type of growth in aggregate demand can be higher levels of consumer spending and investment, maybe due to higher confidence. So people are more likely to buy luxury or designer items when they have more money to spend and they're confident in the economy and they don't feel like they need to save their money in case something goes wrong. Income increases, similar concept. Tax cuts, which means you have more money that you would normally be giving away in tax in your pocket, and falling interest rates as well. So it's cheaper to borrow and to spend, therefore. Cost push inflation. So increased production costs causes firms to raise prices to cover these costs. Okay? So it's very important to take that into consideration. This idea that the business is passing on the cost that they have accumulated to the cost of the product for the consumer. So let's think about it. Let's say I own a business where I sell cakes. So I make the cakes and then I sell the cake. So let's say I make a cake and the price of milk has gone up by a few dollars, like let's say $2. Like let's say before the milk I was getting it for $3 and now I'm getting it for $5. So instead of just accepting that and then having to cut back on how much profit I get, I'm going to pass on that $2 rise in the price onto my cake. So if I'm normally selling my cake for $40, I will now sell it for $42 or $43 to account for that cost, that increase in cost. So therefore, when a consumer comes to buy the cake, they're now paying more because the general price in the good has increased, and so that is inflation. So that is what cost push inflation is. So supply curve shifts to the left, and there's a decrease in supply, also known as aggregate supply. Okay, so the causes increased in cost of production. So if costs of production such as wages, rent, supplies, other inputs, etc. increase, right? So it could even be rent. So let's say I have hired out like a shop for my cake business and the rent has gone up by $15. I may just pass that on to the product. Same thing with wages. So if there's a minimum wage increase, then the business will maybe pass on that rise onto the consumers, so they don't have to pay for it. So then they are generally passed on to consumers in the form of higher prices, which causes inflation. So yeah, hopefully that is all making sense. Next up, we've got imported inflation. So if imported prices increase, perhaps caused by a fall in the price of the Australian dollar, then Australia pays higher prices for goods and services, and this flows through the official inflation rate. Right, so essentially, this idea that now goods are more expensive overseas. Then Australia pays, like, let's say I'm buying a shirt from, I don't know, like Italy or something, and the price has gone up because the Australian dollar has fallen, then I will have to pay more because the euro is worth more. Then that's still inflation because I, as an Australian consumer, am still paying more for that good because there's been a general increase in the price of goods and services, or in this case, a good, which then passes on to the inflation rate figure, the official inflation rate figure. So yeah, hopefully that's making sense with imported inflation. Next up, we have inflationary expectations. So if consumers expect prices to rise, then they may increase their spending while the price is lower. Okay? So this is kind of similar to demand pull inflation, where there's an increase in demand. So if employees start demanding higher wages due to the expected price rises, the cost for employers will increase, and this will cause cost push inflation. So what do I mean here? So basically they're saying that if they realize that inflation's increasing and say, oh my god, I should buy toilet paper because everybody's buying it, I feel like they're going to up the prices in a few weeks, I'm going to go and buy 10 rolls of toilet paper right now. So that's probably, think of people during COVID, that was probably them, right? And then this idea that if I as an employee go to my employer and say, hey look, wages are everything is more expensive, I think I should get a higher wage, right? So then if I go to my employer and say that, then if my employer decides, okay, you can get a higher wage, then that's a cost for my employer, right? Because then they have to pass that on to the products. So let's say that I'm employed at a cake shop, and then I tell my boss, hey look, I think everything's increasing, everything's becoming more expensive, so I think I should get a higher wage to compensate for this. And if they agree, then they will also have to pass on that cost to the consumer. Okay, so then the cake will be more expensive for the consumer. And what is that? It is a general rise in the price of goods and services, which is inflation. So, what is the positive effect of inflation? There's really not much other than the fact that it reduces deflation, which is a fall in spending. So, borrowing as consumers wait for lower prices. So, that can cause a downturn. But yeah, other than that, there's really no other advantages associated with inflation. Next up, loss in purchasing power. So, lower wages, like real income, nominal inflation rate, and living standards, things like that, can all be impacted in that case. So that's how you can get a lower or a loss in purchasing power. So you're not able to purchase as much as you once used to be able to with that amount of money. Higher unemployment, so producers may reduce the workforce to cut costs, right? So higher unemployment may occur. Lower exports, so reduced international competitiveness can be a negative impact of high inflation. Value of savings decreases as well. So if interest rates do not keep pace with the inflation, then we see the value of savings decreasing. Increased inequality, so impacts most on lower income earners. Wage price inflationary spiral. So this is where wage increases lead to higher prices, like we just talked about with that cake shop example, which leads to higher wage demands. Okay, so if wages increase, they lead to higher prices. I say, oh my god, everything's so expensive, can you please increase my wage? And then again, it's just like a process that keeps on going round and round and round in circles, which is why it's called a wage price inflationary spiral, because it keeps spiraling around. Okay, constrain economic growth. So this is due to contractionary policy. So it's really essential to understand what that involves. So obviously when we have high inflation, it's going to cause a bit of issues in terms of contracting the economy. Resource misallocation is another negative effect of high inflation. This idea that investment is speculative on short-term assets, which may increase due to higher returns. So they divert invest. Right, so here's like a sort of summary of some of the negative impacts. So you have loss in purchasing power, you have higher unemployment, you have lower exports, the value of savings decreases, okay? Increased inequality, which tends to mainly impact like lower income earners who don't have as much. Anyway, wage price inflationary spiral, constraining economic growth, and resource misallocation. So you can see the comparison of positive versus negative. So that's why they are always trying to keep the inflation rate targeted, and they're trying to target 2 to 3%. Okay, moving on to the next content block, which is looking at monetary policy. So what is involved in monetary policy? So economic policies and management, we're looking at purpose of monetary policy, the implementation of monetary policy by the Reserve Bank of Australia. So what's involved, so the cash rate, interest rate, that's all things that you would want to be aware of, as well as what's the definition of monetary policy, how does it work, what's involved. Impact of changes in the interest rates on economic activity and the exchange rate. So because you're changing the interest rate, it doesn't just impact, one thing, it impacts many things. It has many flow-on effects, which is really important to understand and analyze. So it's going to impact economic activity. It's going to impact spending. It's going to impact consumers. It's going to impact a wide range of different things that need to be considered, as well as it's going to impact the exchange rate. And the exchange rate is very, very important to make sure that it's at an appropriate level compared to other economies, because that's going to impact investment, spending both into your country and outside your country. And the current monetary policy stance. So where is the current monetary policy stance at? Where is it sitting? What does it mean? How do we approach it? Etc. Okay. So what is monetary policy? Well, it involves the setting of interest rates administered by the RBA on behalf of the government. Okay, so it's very important to take that into consideration. So on behalf of the government. RBA is sort of a separate entity to the government, but they are doing it on behalf of the government. They're setting the interest rates. Okay, and the way that they do this is through the cash rate. And you may already have learnt about domestic market operations, DMOs. If you have not, you will learn it. I'm sure you will learn it as a part of your course as well. So the aim is to smooth the effects of economic fluctuations and maintain low inflation. All right, so we want to try and smooth out these fluctuations of these ups and downs that happen so often. We want to try and smooth those out and try and keep it as stable as possible. And the main sort of idea is to lower inflation, because remember we went through the impacts of high inflation. There's a whole list. Okay, so we want to try and avoid that. Okay, so price stability, full employment, and economic growth. So RBA's inflation target framework aims to keep inflation between 2% and 3%, like we talked about. So they have a goal, they have a target of achieving basically ensuring that their inflation stays between 2 to 3%. Anything higher or anything lower is detrimental. If inflation or the CAD rises, the RBA may tighten monetary policy to reduce spending, as this may threaten the stability of growth. What does this mean? It means that if inflation rises, which means that the price of goods and services rises, it's going up too high, people are spending too much, they're going to just tighten up and reduce spending. So they're going to increase the rates so that it becomes harder for people to borrow, and people will start saving their money. They won't borrow as much, and it's going to push inflation back down. Because think about the types of inflation we went through, right? We went through demand pull inflation, cost push inflation, imported inflation, inflationary expectations. A lot of these require individuals to go out and spend. High levels of consumer spending. Consumer spending here as well. Inflationary expectations, imported inflation, all consumer spending. So in 2010, the monetary policy returned to more of a neutral position as the GFC impacts eased, with the cash rate rising to 4.75%. Right, so in 2010, sort of went back to normal because we had the GFCs like during around 2008 to 9. So that's when it sort of started going back to normal. So why was this? It was because there was a domestic economic recovery and strong mining sector growth, which saw the RBA refocus on containing inflationary expectations. So they really wanted to try and focus on containing all of this inflationary expectation, which if we go back to inflationary expectations, you can see here what it involves. So this idea that consumers expect prices to rise, so they increase spending. Things like that. They want to try and control that because we just had the GFC. That's probably how consumers are feeling. So a lot of economics is also to try and understand and to analyze consumer habits. whether that be spending habits, whether that be, what trends are involved in terms of their savings versus spending and their household savings, etc. That's why if we go right back to the start of the lecture, here, it's so important, right? You may be thinking, why does this even matter? Why does the household saving ratio matter? This is why. Right? Because we want to analyze how they're spending, how they're saving, how much they're saving versus how much they're spending. That's why we even went through the multiplier. We went through marginal propensity to consume. So the proportion of every extra dollar that they consume versus how much of it they save. Right? These are important concepts. It may not seem as important or relevant when you're first going through it, but you can see how it all ties up together. And tying it up together can actually help you understand the concept better and understand the topic better than if you were to just go into it without understanding what different concepts are. Okay? So let's go back to the monetary policy. Yeah. Yeah. Conversely, monetary policy may be eased if growth is below the target and unemployment is rising. Okay? So that's again important to consider. This idea that if growth is below the target, unemployment is rising, they're going to try and ease up the monetary policy, the cash rate, DMOs, interest rates, and try to control it less than they would be when they're tightening it. So let's have a look at some of these ideas here. So the current stance of MP or monetary policy. So currently, the RBA is hiking the cash rates back up from its initial drop during COVID-19. So during COVID-19, there were a lot of decreases in the rate, and there were a lot of issues surrounding that. So they had to sort of address those issues. So, like, they had essentially just decreased the rate quite a bit to try and increase spending, because the aftermath of COVID, a lot of people were just saving all of their money. They weren't going out to spend, etc., etc. So what the government did was they actually said, okay, let's go back and let's try and increase the rate back up, because now it's sort of going back to normal and we're trying to move away from the impacts of COVID. So as at 6th of June, it is the 12th increase in the rate, and that has created financial stress that will hurt households and businesses, according to The Guardian. This idea that when we increase the rate, we have to think about the fact that a lot of people have mortgages that are on a variable interest rate, and paying that back can be very difficult if there is rate increases. We also have to consider that a lot of people have spending and they need to spend for their businesses, things like that. They need necessities, and when the rate keeps going up, it means that it becomes more difficult to attain those things. So there has actually been so much financial stress, and the RBA and the governor, Philip Lau, has faced a lot of criticism for their constant and consecutive increases in the rate. I think the last one that they had, they kept it the same, which was in June, I think. Don't quote me on that. The hike to 4.1% is the highest in 11 years. So it's not expected, and the economy is not really used to having such major increases in the rate consecutively, like in a row. So that is something that you can definitely mention in an essay, and take into consideration when you're talking about it, because it is so important to make sure you're referring to these things. You will be expected to mention some of these things in an essay, because these are the contemporary economic understanding factors that we talked about. If I go right back to the start, bear with me a sec. Over here. You need to know like the cash rate. You need to be able to understand all of these things. You need to be able to mention it in an essay, like I've talked about over here. Right? These are trends. You need to know these trends. You need to analyze the data. You need to talk about all of that in the exam. Because if you're not able to do that, then you're probably going to put yourself in a situation where you're not able to get the highest mark or full marks or reach your potential, really. So going back to where we were up to, bear with me a second. Yeah. So yeah, 4.1% is the highest that it's been in 11 years. So this is a quote that, for example, you can mention in your essay. So here are some quotes. So inflation in Australia has passed its peak, but at 7% it is still too high, and it will be some time yet before it is back in the target range. Some further tightening of the monetary. So this is from the RBA governor, by the way. Some further tightening of monetary policy may be required to ensure that the inflation rates return to target in a reasonable time frame, but that will depend on how the economy and inflation evolve. Remember, the target is 2 to 3%. It's sitting at 7%, which is why they're going through all of these hikes, which is understandable, I guess, in a way, but we also have to consider the financial stress on households, which is a lot of the criticism is coming from Australians saying that that is not being considered. The financial stress on households is not being considered when they are going through all these rate hikes, cash rate hikes. Okay, so what he said, if I highlight, they said that they want to try and get back into target range. Okay, so you can definitely mention that in the essay. Some further so when you talk about theory of what monetary policy involves, what's there, you want to talk about, and you're going to inevitably talk about the target range that they've had since the 1990s of, I believe the 1990s of like the target range, etc., of 2 to 3%, and how they were able to come to that. Then you talk about like the further tightening of monetary policy may be required, things like that. So they do want to try and get down to 2 to 3% because they're at 7%. So they want to do it in a reasonable time frame, but I think because they have been receiving a lot of the criticism, they have sort of slowed it down a little bit. So yeah, we'll see like how that continues on in the next few months, and I would definitely highly recommend you keep up with that and you have all of that information down, because in your exam it will become very, very handy for you. To mention that, right? So you want to be able to know what's involved, what's the current stance, because this is the current stance as at like June, the end of June, start of July. But like for you, it's like your trials and your HSC are towards like August, September, October. That's different. Like that's going to be very different to what it is right now, because there will be more changes in the stance, whether that be they remain the same, or they actually end up increasing more, or they decrease it, which is unlikely, but it's, again, don't quote me on that, like you'd never know what will happen. You do have like people who predict what will happen, but like an economist will like do a lot of analysis and say, okay, whether that the rates will increase, decrease, but you will get that information as well. I guess by the time trials and HSC comes, but you can also, I guess, in your essay talk about predictions after October, because your exam, I guess, will be in October. Around October time. So you can talk about what will happen after October as well, and that can show the marker your extensive knowledge and you've done that research, and that's going to be really important. And you can do the same for your trials as well. So yeah, it will depend on how the economy and inflation evolve, he said. So I've put down at the bottom a link to the article that I've quoted here, which is from The Guardian. It says that the RBA interest rates Reserve Bank increases cash rate by 25 basis points in attempt to quash inflation. So yeah, news articles like this are really important to what I was talking about earlier. If I go back, there's a lot of back and forth, but I guess I just really want you to all understand what I'm saying and why everything is sort of linked to each other. So this is why I say, have these like different articles that you can refer to, like different websites. Spend that 10 minutes a week and then make sure that you do make that connection between the theory and your news updates as like your quotes analysis. Okay. Cool. So, monetary policy is implemented by the RBA and it's done through the open or domestic market operation, which I was talking about earlier, which is also known as a DMOs. So, the cash rate is the interest rate paid on overnight loans in the short term money market. Right? So, this is basically the interest rate for the banks. Okay? So cash rate is the interest rate paid on overnight loans in the short-term money market, which is normally used by the banks. So in that way, you have an ES account, which is also known as an exchange settlement account. Basically, this is the account that is used to settle payments or clearing with the other banks and the RBA. Because the other banks may have accounts with each other where they transfer money to and from in accordance to whatever the rate is, as well as with the RBA. So this is not done through your normal account that you would have with your bank. It's done through specific accounts that are referred to as ES accounts, or ESAs, or exchange settlement accounts. So when an ESA or exchange settlement account is negative, the cash rate is charged as interest on the balance. So that's why I say cash rate and not interest rate, because the interest rate is different from the cash rate. The cash rate is not the rate that you would use when you go to the bank, you go to ANZ and you get credit, or you go to NAB and get credit. You go to Commonwealth Bank or whatever it is. Those are the interest rates for the banks. So the cash rate is not what you use, it is what the banks use, and then the banks will pass that on to the consumer via the interest rate. So the RBA can sell or buy Commonwealth Government Securities, CGS, Commonwealth Government Securities, it's a mouthful, to increase or decrease the supply of money that is actually sitting in the exchange settlement accounts. Okay, so the RBA, essentially what they're doing is they're trying to manipulate how much money is sitting in those ESAs, exchange settlement accounts. How do they do this? Through government bonds or securities, rather, to change around the supply of money that's actually sitting in there. It's very important that they do so because that helps the implementation of monetary policy by the RBA. So that's why I think a misconception that students often have is this idea that this idea that cash rate is the same as an interest rate, or they don't understand the difference between the two. But they do have a difference, and it's important to understand that difference in order to understand what the implementation of monetary policy actually is, and how the RBA actually goes in to achieve that. Okay, yeah, so if the RBA increases the cash rate, banks pay more to maintain their exchange settlement accounts. Okay, so it's very important to note that down in terms of this idea that the interest rate for the bank is not the same interest rate that we have, it's the cash rate, and then they can choose whether they pass that on or not. That's why sometimes you'll read articles where it says ANZ or NAB or Westpac have actually transferred or passed on the cash rate increase onto the interest rate. So this incurred extra cost, which is the interest, puts upward pressure on the interest rates. So essentially, it's like the RBA is saying, here's the new cash rate or the interest rate for the bank, and then the bank will say, okay, that's actually increased, so we're not just going to accept that cost, we're going to pass it on to consumers. How do they pass it on to consumers? They put it onto the interest rate for the consumers, and that's how they can push that up, and then that's how it impacts consumers. But again, it's important to note that cash rates changes are not always passed on by banks. Okay, so hence the impact can be limited, right? So sometimes the RBA will increase the rate or decrease the rate, but there will not actually be any impact onto the actual interest rate for consumers. So consumers don't face any impact or effect. And so that's limited by that nature of the implementation of monetary policy by the RBA. So RBA may end up not having much of an impact at all. So, for example, when would this be the case? Like, why would they not do that? Well, because sometimes cash rate cuts may not be passed on, because in the form of lower interest rates for consumers, so that the bank can make more profit. So they'll keep the same high rates or higher rate, and then they'll pay the lower cash rate so they can actually make more of a profit. Right, so hopefully that is making sense and is clear. Okay, so impact of changes in interest rates on the economic activity. So if the aggregate demand is growing too fast and consumer confidence is too high, the RBA may increase the rate because they want to try and control it, but they're increasing the cash rate. Again, it's the job of the banks, or the role of the banks, to see if they would like to pass it onto the interest rates, which they normally will because it's a cost for them rather than a benefit, which you see with lower rates. This is because an increased cash rate causes interest rates to increase, right? Because they're passing it on. And that raises the cost of borrowing for consumers. So that's actually going to de-incentivize or discourage spending in the economy. If AD is slowing down and consumer confidence is low, the RBA may decrease the cash rate. Okay, so that's another important thing to note. The idea of the opposites aligning, right? So they want to try and either increase or decrease according to what the situation is, and that will either incentivize or discourage spending. So this is because a lower cash rate causes interest rates to decrease normally, hopefully, if the banks pass it on, and that will incentivize spending, and it will actually encourage everybody, like consumers, to go out and to spend. So that is the impact of changes in the interest rate on the economic activity. So either encourage or discourage spending, depend on, of course, a range of factors, with either if the banks pass it on, how much savings that people have, etc. So that's important to note. Moving on to the transmission mechanism. So this refers to how much in the stance of monetary policy influence economic objectives such as inflation and economic growth, how changes in the stance of monetary policy influence economic objectives such as inflation and economic growth. So it's very important to understand the changes in the stance, so whether there's an increase or a decrease in the cash rate, the impact of that on the interest rate. So all of that will obviously have a major role and influence on inflation, on economic growth, and a range of other economic objectives which are very important. So this idea of intertemporal substitution channel of monetary policy refers to this phenomena that where interest rates are low and savings are discouraged, right? Think about it. So interest rates are low, savings are discouraged. They want people to go out and spend. That's causing consumption and other forms of investment to increase. They want people to invest, they want people to go out and spend, they want injections into the economy rather than leakages, which are like savings, right? They don't want people to save, they want people to go out and spend, they want to inject money into the economy. So until the rates rise again, right? So until the rates rise again, think back to GFC, think back to COVID, the initial, post-COVID response as well. So the wealth effect essentially refers to when lower interest rates makes borrowing cheaper Of course, we know that lower interest rates makes borrowing cheaper, which therefore encourages spending and increases demand for all different types of goods and services, rather than when it's higher interest rates making it more expensive, decreasing spending and decreasing demand. For example, in the housing market, making homeowners feel wealthier and more likely to spend. Right, so they feel like, hey, actually the interest rates are quite high, I'm doing quite well, like, you know what I mean? Like, I'm happy to go out and spend a bit of money. The opposite also holds true when we're looking at the impacts of changes in the rates on the Australian economy or the economic activity in general. So this idea that the opposite also holds true for a higher interest rate, making consumers feel wealthier due to increased asset prices. Okay, so this idea that again, my sort of like you just as a homeowner just feel a lot wealthier because your assets are worth more than they were a couple of months ago because of the rate change. So according to the RBA, for 1% for every 1% decrease in their interest rates, household spending would increase between 0.1% and 0.2%. So there is a correlation there. And we can see why that's the case. It's very obvious because when we see a decrease in the rates, it means that people understand that it's now cheaper to borrow. So they're more likely to go and borrow. Right? So I hope that this is clear. Just please try to understand and really think about the transmission mechanism. Think about these concepts because they will come in very handy. And to understand them is really going to benefit you because they'll come in handy when you're writing essays and things like that to include those concepts into your response. So, moving on. So, the impacts of changes in the cash rate can be illustrated in the following diagram. So, when we want to tighten monetary policy, the RBA sells Commonwealth government securities, like we talked about. So they will sell the securities. What will happen is there will be a shortage of borrowable funds, right? Because there's not as much there to borrow anymore. So we know the simple rule that when there is a decrease in supply, the prices will increase, right? Because there's not as much available. Think back to the Yeezy example that I went through earlier. So then they will increase the cash rate, which again, not directly related to the interest rate yet, right? There's also a few steps in between. Banks may increase the interest rates if they wish to pass on the increased costs. They don't have to, but they can. They can choose to, but they don't have to. Again, making sure I'm like drilling the same concept. I know I sound like a broken record, but I really want you to understand this fully. Then debt servicing costs increase. Interest increases. Interest rates increase. That is the one that's going to impact consumers. So that's therefore we see a decrease in consumption when we see a decrease in investment spending. Right? Then we have decreased economic activity. So this idea that we do have that role that the change in interest rates plays on the economic activity. And it all started off by an increase in the cash rate. So you can see that flow. And this is a very difficult concept that, I really think is made a lot easier by a diagram like this because it's broken down. Otherwise, I remember reading this in the textbook and I was so confused because it was just like it felt really messy to me. So having it in a format like this really helps. So I hope that it helps you too. The opposite is the loosening of monetary policy, so it's literally flipped over. So the RBA buys Commonwealth government securities. There's excess of borrowable funds, so there's a lot of borrowable funds available, so they don't have as much value. So therefore they can decrease the cash rate. Again, the cash rate is not the same as the interest rate. The cash rate is there for the banks. So the banks may decide to decrease the interest rate to pass on the decreased costs. They will normally do this to become more competitive in the market, but otherwise they can also choose not to do it because they're benefiting, right? So debt servicing costs will decrease. Then there'll be an increase in consumption and investment in comparison to when there is a tightening of policy, because now it's cheaper, right? It's cheaper to borrow funds, so therefore an increase in consumption and investment can actually be helpful. And then, because there is an increase in consumption and investment, we know that this is an injection into the economy. And so the impact of this change in the rate on economic activity is that it will increase the economic activity because of the loosening of monetary policy. And it started off with RBA buying CGSs, securities. So you can see the difference between the two, hopefully, and I hope that the difference between the cash rate and the interest rate and the whole process is becoming a lot more easier to understand, especially where the transmission mechanism also comes in. You can see, like, the impact it has on economic objectives and economic activity. So yeah, would highly suggest to go through this. Just make sure you understand it, note it down, put it down somewhere. You also have these slides available to you as well, so just make sure you have it handy. I think it's really useful, a really useful summary of exactly what happens in the whole process. So yeah. So, impact of changes in the interest rates on the exchange rate. So, looked at it on the economic activity, on growth. Now, looking at it in terms of the lens of the impact it has on the exchange rate. So, high domestic interest rates increase the demand for the Australian dollar as savings rates are more attractive for investors. Right. So, high domestic interest rates increase the demand for the AUD. Why is this the case, right? Is because it's more attractive, right? You think about it, savings rates are, much more attractive because they're going to get a higher return. If I save my money when the interest rates are low, I'm not going to get that much back. If I save it when it's high, I'm going to get a lot more back. So as an investor, that's a great thing for me. This can cause an appreciation of the Australian dollar. So whereas low domestic interest rates may increase supply for the Australian dollar, as savings rates are less attractive for investors, and money may be invested internationally. Instead of, if I'm getting a very low return here, I may just decide to invest my money in another country that has a higher rate so I can get a higher return, is essentially what this is trying to say. Right? So this interest rate differential determines whether investment happens in Australia, whether investment increases, whether it decreases. So there are so many roles for monetary policy and for the rates. Like it's not just limited to just impacting economic growth. It has a lot of other impacts on the economy as well, which is important to consider. Right? So the interest rate differential determines whether investment and hence the demand for the Australian dollar increases or decreases. So, however, the impact on the exchange rate is a secondary function of monetary policy. It's not the primary function. And with the RBA focusing on stabilizing inflation as a priority. So their main role, and I think that's again broken record, the main goal of the RBA is to stabilize inflation, to keep it between 2 to 3%, and we've seen that with the recent rate hikes, the cash rate hikes. That we're currently sitting at about 7%. We want to get it down to 2 to 3%. That's their main goal. But in saying that, just because you're trying to achieve one thing doesn't mean it doesn't have a domino effect on other things, right? So it does still have an impact on the exchange rate, but that's not their primary function. So making sure you're able to distinguish between that and you understand that difference. Okay, moving on to the next slide. We're now going to look at the exam tips, tricks, and skills. So that essentially concludes the content component of today's lecture. I hope that everything was fairly clear and allowed you to gain a little bit more of more of an understanding of the content involved and how to go about it. So now let's go through the exam tips, tricks, and skills. So, before we do that, I did want to go through a bit of an overview of the 2023-2024 budget. So, there is this idea of the delivering cost of living relief. So these are like some of the main concepts that I just screenshotted from the budget.gov.au website, just as some of the main features that have made themselves onto the headlines of the budget articles. So, delivering cost of living relief. We know that there is a cost of living crisis in Australia. Inflation is very high. We can see those pressures, and so the government is aiming to try and reduce some of the cost of living pressures. The growing the economy, so modernizing our economy and maximizing our skills. So a lot of criticism that Australia has been getting is this idea that they don't have an export base that is very diverse. They have a very narrow export base, so they want to try and vary that export base to have more things, especially with people becoming a lot more environmentally aware, and they want to try and focus on environmental sustainability. And one of the main income earners in Australia is the mining industry. So to move away from that and to have other sources of growth is something on the agenda for Australia and something that they should be addressing, which they are because it's in the budget. Strengthening the budget. So putting the budget on a stronger foundation to make Australia more resilient and secure. Resilient, secure, to bounce back from all of the recent changes in the budget. You know, we had the huge factor of COVID-19 that played a huge role, things like that we want to try and improve as much as we can. Strengthening Medicare, so to ensure Australians can get the primary health care that they need. Right? So, Medicare, the health system, is something that Australia really wants to focus on improving, and making sure that all Australians have access to care, medical care. And finally, broadening opportunity. So, advancing equality and extending opportunity across the country. There we go. So those are some of the things that the budget has tried to, focus on and improve and spent a bit of money on. If you would, obviously, this is not sufficient, like as an understanding of the budget. This is just like a bit of an overview. If you would like more information, obviously, just go onto the budget website, have a look, make notes of some of the investment figures, what we've invested in different things. They will come in really handy when you look at your notes later on in the year. Let's go through some exam prep tips. So, first of all, find your best study method. So, I preferred learning by reading and writing my notes. Something else I also did was I would have like slides with my notes transferred onto the slides as well, and I would teach myself those slides closer to revision and exam time so that I would be like sort of have a greater understanding of the content. Right? So some people also prefer to do practice papers, which is key, like something that I also did, and I would highly recommend that you do practice papers. And then not only do you just do the question, but also go to the marking guidelines, which are available on the NESA website. Look at the marking guidelines, compare your answer, see what you would give yourself, and then improve your answer if it's not full marks, and then sort of go back and forth. If there are certain questions you don't understand, and even after looking at the guidelines you don't understand, go and ask your teacher. They are there to help you. Your tutor, ask your tutor as well. You can ask your friends as well, whoever it is. Another thing that is really important, and something that I really push for my students to focus on, is this idea of understanding over memorizing. So make an effort to think deeply about the content that you learn rather than just memorizing it, because the HSC examiners are really focused on people, and they are going to make the exam in a way to reward people that have understood the content. Right? So memorizing can only take you so far. Right? If you understand the content, you can add in your own analysis. You can go further. You can develop your own opinion, your own judgment, which are all things that you'll see in some of the HSC verbs that you actually need to get the highest mark. Right? So how can you do this? You can think deeply about the content that you learned. So actually go in and say, actually, what does this mean? How do I go about this? Like, Look at real life examples. That really helps. Look at news articles related to exchange rates, related to the GFC, to COVID, the stimulus packages, monetary policy, fiscal policy. That will help you form your own judgments. That will help you actually understand rather than just memorize whatever the textbook is saying. And then discuss in class, like engage in discussion. If your class is having discussions like about different things, engage in it, ask questions, right? Because those things can really help you gain a better understanding of the content. Collate important stats in a form easy to memorize as well, because there are things that you will need to memorize, but I'm just saying you would also need to understand it. So when you are doing that memorizing component, have like a graphic or a doc or something with like all of the stats that you've learned that are there, easy to access, so that you can go back to them and just make sure that you do know them. Become familiar with your syllabus. Write essay plans, right? Those are the things that will get you through. Your HSC examiners are making your exam by looking at the syllabus. So it's only, only obvious that you would do the same when you're making your notes and you're going through practice questions, to make sure that you understand the syllabus and everything in it. And if you don't, ask questions, talk to your teacher, like get it sorted, you know what I mean? Write essay plans as well. So making sure you have those essay plans is really important, because I guess, I'm fully aware that not everybody would have, free time to write an essay every few days, because it takes a bit of time and prep. But if you can write essay plans, so just like have a question and then do, okay, what would I write briefly in my intro, dot points, and then dot points of what I would put into each paragraph, and then every few days or every week or something, have at least one essay that you write out to help you get into the zone to memorize and to effectively learn, and so that you're invincible in the exam. Essay tips. So always plan out your essay. Don't just go in blindly without knowing anything, like without making some sort of an effective plan. Complex sentences aren't rewarded, so you can keep it simple, but just make sure your point is making sense, which sometimes in complex sentences it can get a little bit foggy. Clarity and use of syllabus terminology is quite important. So one of the things that is really important is you use terminology that's related to economics or economic specific terminology. Graphs are so important. Like if there are graphs related to the topic that you're writing about, make sure you include them and you take the time to learn them, because they will honestly help you out so much. Succinct but no slang, right? You want to make sure that your answers are succinct, make sense to the point, but avoid slang, because it is still an essay. You still want to be formal. Theory versus fact. So words like may, might, could, theoretically, this ideas of counter arguments as well. So 70% argue for, 30% argue against. So think about it. Like think about where you stand or what your stance is in that essay question, and then go from there. So however, like you can have like a however statement, and that can help like sort of differentiate and have those two sides there. No NESA verb definitions, please. Like literally just type into NESA verb glossary, HSC verbs glossary. It will come up right away. Make sure you know the definitions of the key terms, like assess, analyze, what that involves, like discuss. Discuss, for example, you're talking about advantages, disadvantages. Making sure you know those things so you know how to effectively answer the question is quite important. Stats. So must not just state, you want to analyze. So treat like a quote from English. So follow like the Peel method, for example, or whatever method you use. And wide reading quotes. So do readings and then have a wide reading quotes in there as well. It will show that you've done additional work, and it will show the marker you've gone above and beyond in comparison to your classmates, and so you can get a better mark. But yeah, those are some of the tips for essays. Also, another thing is like for one of the essays, you have a stimulus. Some students just decide to ignore the stimulus. Don't do that. Make sure that your stimulus is in your response. Make sure you're analyzing it, you're making reference to it. How to pick the right essay question. So, read the essay question first, right, in reading time, and then you want to read the rest of the paper. So you want to choose which essay question you want to do, and then as soon as writing time starts, like write out your plan, because you may end up forgetting some of that information when you come back to it at the end, if you write the essay at the end. For some people, they feel more confident in certain areas, so they start by thinking about which area you feel the most confident doing. Right, for me, I would always read the essays first, and then when writing time would start, I would write down a quick plan for which essay questions I wanted to do, and then have a quick plan for it, and then I would go start from the beginning, do my multiple choice, do my short answers, and then leave as much time as possible for the essays. Then consider which can you brainstorm the most ideas for, which do you know more stats about, which do you find more interesting, like when you're thinking about which question to do, which lends itself more towards a contemporary economic climate, which do you think you would like do quicker or easier. Like for me, for one of my assessments, we had a specific economic issue allocated to us, and then in the exam, so my economic issue that I was allocated was environmental sustainability. So so I already felt very confident because I had to present to the class about environmental sustainability. So in the exam, when one of the questions were related to environmental sustainability, I immediately chose that one because I was very confident with it. I knew stats about it. I found it very interesting, and I had a lot of ideas for it. So for me, that one was easier. So that's what I mean when I say think about these things. Band 6, so which relies less on strict theory and more on analysis, could also be something that you could go off of. Tips to integrate stimuli. So highlight the keywords from the syllabus. Highlight any information that directly references a specific economic event, specific organization, forum, whatever it is. Those things can be really important in helping you achieve success. Is the stimulus dated? So this could hint at about which contemporary economic stats you will need to include in your response. Right, so when you have graphs, they're dated, look at that. Treat the stimulus like quotes in English. Don't ignore them. They are so key to success in the essay. Use them to back up your response, your theory. Answer questions more directly and mention the content more relevant to what the marker is looking for. You want to make sure that you're able to get and pull as many marks as you can. Where is the syllabus stimulus from? So you want to look down the bottom, it will have the reference down there as well. Sometimes you'll even have quotes as a part of the stimulus, so make reference to those quotes as well. But yeah, that essentially concludes today's lecture. I really hope that you found this lecture to be useful to you. I hope you learnt something new, and I hope that you do utilize some of those tips and tricks towards the end there. I wanted to say thank you so much to everybody for listening in today, and I'm sure that you'll do great for your HSC economics journey. But yeah, thank you so much, and I'll speak to you all soon.